And we're back.
It didn't give me the option to exit now.
Oh, really?
Being illegally
Usually
recorded.
does. All right. Well, it's been a bit, but some pretty important stuff to talk about. There's just so much going on in the news. I've had so many people I've talked to already just in this first quarter of 2026 think that they can time the market, think that they've got all the answers, and then as soon as you think you got it, boom, it goes the other way. So I'll give a really quick update on mortgage rates here, and then we'll have Greg you just to kind of take it away and answer some questions about some new things coming out about homeowners insurance, because all we hear about is affordability, affordability. Depending on which side of the political aisle you might be on, you're pro or against certain changes that are being proposed. And most of it kind of seems like lip service, and I think this might be one of them. So we'll see what your opinions are of some, uh, you know, Fannie and Freddie Mac remove certain homeowners insurance requirements that will reduce costs. So there's a lot of these kinds of things going on. A lot of it directed by the FHFA director Bill Pulte. He's a home builder, so look into it, take it with a grain of salt. But there are tons of proposed changes. There's multiple very large bills trying to get passed through Congress right now that could, one way or another, 1,000,000% affect affordability, how housing supply and demand might look. So today we'll just focus on the insurance stuff. We'll do another video in like a month or so because I'm going to be in DC at the end of April. So about this time next month, I'll be all sorts of the right from the center of it all. So real quick, interest rates were doing great. We finally saw 5.99 on average. That was right at the end of February. And then hello, March. Look at where we're at now, all the way here at 6.5. This is obviously due to oil, inflation concerns, Federal Reserve chair comments after the meeting yesterday. His little presser, every time he gets behind the microphone, rates go higher. He's only got about 2 months or less left in his term. He will be replaced. There's a new guy that's been proposed. We'll see what the markets do about all that. Some other Fed member made some comments today, and that's what really shot rates up even more. So anything at all at any moment can change interest rates. Literally, some opinion on a press conference, and boom, rates go up higher. So if you are out there and you're looking to refinance or purchase a home and you are trying to time the markets, best of luck to you, because even the experts can't really do that. Right here, tons of people had an opportunity to save some money, and they chose to wait because they thought it was going to go lower. So look what happens. Now your opportunity and your savings might be wiped out. So take that as you will. Greg, any thoughts on this, or let's roll with some insurance talk?
I mean, I don't really understand the mortgage market. Just what we talk about. You're gambling and you get pissed and you don't win. So,
Well, yeah, I mean, and people aren't really mad. They take it on the chin, but when I'm telling them, hey, don't trust the markets to go any lower, you got to listen. I mean, look, it just go back up. I told people a bunch right here. You're at the blackjack table. You're up $500. Are you really not going to walk away because you want to be up 1,000?
yeah,
That's
that's
not
that's
the.
rich coming from you.
That's well, but I don't gamble my monthly payments that way or
Right.
whatever.
Yeah. Yeah.
Plus,
What's
I'm
what's the extra
and
$20 gonna do for you?
well, right, and that's just it. Like you're waiting on a 5.8 instead of a 5.9. That might only be $10 a month, and now you're not even going to get the $200 a month that we had from the savings
Mhm.
this way. So, but it doesn't matter because I'm done with blackjack. I've moved on. I think I'm a slot machine guy now.
You smoking cigarettes and you take your oxygen tank with you?
Yep. Some Red Bulls and just sit there and dance around the machine for a bit.
You're gonna dye your hair purple pink and go to church on Sundays with a nice hat.
We'll see. All thing I know is that's the only money that ever wins anymore.
Yeah.
All right, Greg, tell us what you think about this. I'll scroll through the article where you want, but I sent this to you. You were reading into it. Hit me.
This is just my opinion. This could play out differently, but in my opinion, this is nothing but a headline. It doesn't help with affordability. It helps with qualifying, and that is it. And just because you're qualified and you can attest to this doesn't mean you can actually afford it.
Yeah, and based on your headline thing, I mean, if you read this is all just political talk. Thanks to this and this, and they even said stupid, skyrocketing. We're gonna help out families. This is all. I think it's a lot of lip service.
What's funny about that is although insurance premiums are much higher than they were 5-10 years ago, they've actually leveled off. They're going cheaper. We're saving people a lot of money daily just by switching to a new carrier when we couldn't have done that just a year ago. So the marketplace has opened up. So like you said, it's a lot of political talk, but the thing is they don't understand how insurance works. So like when I have to tell a client, hey, your roof coverage just went to actual cash value instead of replacement costs because now it's 10 years old, they get pissed. So this is not a benefit. And all it's going to do is promote people being lied to, in my opinion.
Well, we'll break it down because we haven't really talked about it. So when you say actual cash value and all that, break that down exactly, because what does that mean?
Yes. So now the value of your roof is determined from a depreciation schedule. So as it gets older, it's worth less and less in its current state. So every insurance company is going to have its own schedule, its own table on how they depreciate the value of that roof. But to make things simple, we'll just start at 10,000. With actual cash value, as it's depreciating, let's say it goes down 5% a year. So at 5 years, your roof is only being covered at 75% of its replacement value. So if it costs $10,000 to replace, the insurance company is saying, hey, we're only covering 7,500 of it. Oh, and by the way, out of that 7,500, you're still responsible for your 2% of your deductible. So let's say that 2% is $2,000. So now the insurance company is only responsible for $5,500 of that roof replacement. And you saved maybe $400 a year. And now you're having to pay thousands of dollars out of pocket. The 25% that you're now responsible for because it's depreciated, plus the $2,000 that you are required to pay for your deductible. So it saves you $400 and it costs you thousands on the back end. It's not a beneficial move at all. And in my opinion,
right. So, but you say on the back end means if something was to happen.
If something was to happen. So let's say our roof on my house got replaced 2 years ago. It was $14,000. Our deductible was $2,800. With this depreciation schedule, let's say if our roof had been covered at ACV and it was depreciated down to 70% and our deductible was $2,800, we would have probably had to cover almost $9,000 of that $14,000 job. So if the talk is about people don't have money, they don't have reserves, they can't afford things, so they can't put money away, what's going to happen when they have to cut a $9,000 check? Or else their insurance is taken away from them because they didn't replace the roof. So it's just removing a problem from the front and it's putting it to the back.
Exactly. So that's where they're going to tell you entry level into a home, the cost might be going down now because your actual monthly premiums can go down. But if something was to happen and you need the insurance, then effectively your money out of pocket is going to go way higher.
Yeah, and some of these people could be put in a situation where now they're responsible for more costs than what the roof even costs to replace. So you're in a situation, they go with exactly. How do you let that happen? That's also where you come into regulation on contractors charging for roofs.
But it's not that much different than in health insurance and things too. At this point, to take certain, depends on what it is, but to go to a doctor, get a medicine, do this or that, if you just did cash pay, it's a lot less than what they actually bill the insurance. So
right, people are like,
sounds like it's just pushing it into that market where there's just who knows what's going on the back end there.
Well, and what I was talking to a realtor yesterday about was this takes away a leverage arm for buyers. Hey, this roof's in bad shape. We think it needs to be replaced. It's 10 years old. That's our negotiating power because the market's not great for sellers. Well, the seller comes back and says, well, you don't have to have replacement cost coverage. Insurance is actually pretty cheap because Fannie and Freddie said it is. It's going to take away a negotiating tool. Maybe not for a 10-year-old roof, but the roof that's like on the cusp of like 4 to 6 years old, where that's a huge price difference when it comes to the age of your roof from 6 years to brand new.
Well, and that brings up another point, because if that's the case, then there's going to be a lot of things that are going to be in trouble, because deferred maintenance is has to be an all-time high. I don't have an actual stat, but I know for a fact contract fallouts, right? Buyers going under contract, say, I want to buy this home, seller accepts under contract. Those deals are falling out at a higher rate than the last few years, plus, and if not at an all-time as well, because so many houses, so many sellers just assume that they're going to get theirs when they sell and have not been keeping up with the house. We've talked about this a lot last year. Deferred maintenance is a real issue. And so it's killing contracts. Sellers aren't accepting, repair negotiations. They're saying, no, I don't have to fix that. Like, well, yeah, you kind of do. It's your house and it's a health and safety concern. But then you're telling me at the same time, well, now insurance really isn't going to, they're not going to have anywhere to go with a claim because it's going to be so expensive. So could this then, unintended consequence, push deferred maintenance even higher because insurance is just not going to be affordable for people to make claims on certain repairs?
Yeah, and what it's going to do is it's going to limit the accessibility of insurance too. It's going to build, right? So now somebody's like, oh, I don't have to replace it because I can do ACV. Somebody's not negotiate a new one. And now a 5-year roof quickly turns into a 15-year-old roof, turns into a 25-year-old roof because nobody wants to pay for it or they don't have the money to fix it. And now we're in the realm where no one wants to insure it. And now you have to go to a whole new marketplace where it's even more expensive.
Yeah, I mean, I see it all the time. I used to live in California and I saw a lot of bad homes that were built a long time ago that didn't get fixed up, deferred maintenance like crazy, and people just accepting it. And then insurance out there is crazy. They got different things like fire and too, so sometimes it's hard. And then if they got a paid off home, you're not required to have insurance. And then boom, all of a sudden you got a bunch of homes that are dilapidated. And I'm very worried that that might happen in other places as well that are having issues with deferred maintenance, affordability, long-time homeowners, multi-generational living. It's just harder on a home to have 5 people in when it's really probably built for 3 or whatever. And then on top of that, you're telling me, well, this might not be good for people's actual bottom line or out-of-pocket cash for insurance claims. That would be my concern now, is that it's going to be even harder to get things fixed.
Yeah, like I said, this just doesn't fix any problem whatsoever. And like ACV versus replacement costs in terms of pricing, sometimes it's as few as a couple $100. Like it's not as drastic. Maybe elsewhere it's drastic, but I don't think it moves the needle enough to be worth the cost on the back end. Like it just doesn't.
Interesting. Well, any other thoughts on this? I will just make it brief today.
I mean, you're gonna, like we've talked about, you're gonna have a swath of insurance agents, contractors, real estate agents, and brokers, mortgage brokers, who are going to educate their clients incorrectly and only focus on, hey, this says it's cheaper now.
Yeah.
And mislead clients intentionally or intentionally.
Your buying power just went up because your insurance is less, so you got more wiggle room in the DTI to pay $15,000 extra for a house. Let's push the monthly payment from the house angle, since we got this wiggle room coming from the insurance angle, and also best of luck to you down the road.
Yeah, all it's doing is like the carnival games where you shoot the water in the clown's mouth and the balloon builds and explodes. All it's doing is it's adding water to that balloon, and eventually it's going to pop. And
Well,
back in the
same with all
day, it
those slot
popped with the
machines.
market crashing. Yeah, back in the day, it was the market crashing in '08 from the mortgage side. And now this seems like they're just trying to do it again from a different angle.
Yeah. Anybody who's trying to time things out, calling, Stuart, was it Chicken Little? Sky is
Hmm.
falling, the market's going to crash, the bubble's going to burst. You got to stay ahead of the game, because I don't believe that that's the case. I think that the market is strong. The demand is really high. I've also been seeing a lot of fallout, but I've been seeing a lot of multiple offers and listings going off the market in a week or so, and not 2 months. So the market has been changing. Rates coming down just a little bit gave a lot of people a lot of confidence. So you can't tell me that you're going to wait for the rates to come down. Can't tell me that the market's going to explode, because if you believe in supply and demand, I think that's really strong.
Yeah.
There's a ton of pent
The
up demand.
Yeah, I'm reading that last bit that you've got up there. It says updates mean lower monthly payments, more first-time home buyers able to close on homes. That's their focus. Why don't we just build more? Just add more supply.
Well,
I know there's a lot that goes into that too, but
with but one of them is a lot about lowering the entry costs, cutting a lot of regulations. Basically, people say that the builders are handcuffed right now, and this new proposal, if it passes and signed into law, would effectively unleash the handcuffs, and the builders can go nuts. And it's supposed to help them with being able to afford to build more, but that does not mean that they're going to lower the purchase prices that they're going to be offering. They're just going to have a bigger margin.
yeah, when I hear people say like the builders can't afford to build, it's like, yeah, they can, because they're offering 3% interest rates. They're giving you 30,000
Yeah.
in closing costs.
We
Like,
also have we also have to be really careful, and all those rates are going to go away though, because they bought those before and they
yeah,
only sold many of them.
hmm
So yeah,
yeah,
just
it's
careful, folks, with your news. Make sure you break it down, get an opinion from all sides. I'm going to hear more about this through the people I really trust. They've already started talking about it. That's where I heard from it. And they're plugged in. They talk to these people directly. And in this condo stuff, I'm told that this really might not be. There's some unintended consequences in here. Just like you said, they don't understand insurance. They don't understand the mortgage rules either. To be TBD on this stuff here. I'm not sure that this is going to be good. I read someone's post saying there's a couple good things, but man, there might be a few really bad things from this. So I can't talk on this yet. Too early to tell. Too early to tell on Vantage credit scoring entering the model, trying to help borrowers. Too early to tell on blah, blah, blah. Everyone freaked out and said, oh, 50-year mortgage is going to be the fix. Well, that went away quickly because they debunked that right away as a bad idea. So lots of things are
just
being thrown out
liability.
there to see what sticks.
Yeah.
Not much is sticking just yet. Because we got a lot of smart people out there, and they're saying, did you think about this? All right, yeah, cool. We'll scrap that. Well, just don't tell anybody. Don't put on the news headlines that we're scrapping it though.
Yeah. I mean,
You'll hear
my prediction is with what we're looking at here, the only buyers that are there's gonna be very few buyers that hear about this, if not directly from their mortgage broker or their real estate agent. And those are the ones who are dealing with buyers who probably shouldn't be buying. It's purely just a transactional volume thing for them. That's it.
If you're a realtor, or if you're a buyer that needs a realtor, really pay attention and make them work for it. They make us lenders and insurance shop like crazy and compare and contrast. Don't sign with the first realtor, either, if you're going to be that way. Make them earn it. Have a meeting with them. Make sure you trust their information. Because if you can tell that they don't know what they're talking about, I'm getting people referred to me all the time right now because they're being taught by people who don't know what they're talking about. They're being taught wrong things, and I'm having to help train realtors all the time. So let's pay attention to that as a buyer. Make sure you got a good one, and don't let someone force you into a home if it doesn't feel right. It's okay to just say, "No, I don't
exactly.
want to do it.
Hmm.
I want to do the mortgage. I don't want you to back out. I don't want the contract to fall out." But if you get in it, we've had buyers of our own clients fall out because if you get in it and that inspection report stinks, it's okay to back out. Do not put
Yeah,
yourself in a situation where you're in a money pit. And if you're in one of these homes that looks great on the listing photos, but then you've got a guy in there that peels that lipstick off that pig, and oh boy, it's okay to back out. So make sure no one's forcing you to do anything.
exactly.
All right,
No
that's all
means
I got.
no.
What do you got? Anything else?
That's it.
Cool. Good. Good to be back.
Yeah, good to be back. I'll
We'll
I'll
try.
rotate that photo for you
Yeah. I don't want to
if
see
you
it.
if you want a different guy up there
Yeah,
every week
that'd be fun.
or month.
All right, we'll try
All right.
next week.